And joining us now to share his commentary on the day's market performance is Louis Storm from Vega Capital. Louis, thanks so much for your time this afternoon. So Powell and his team of makers cutting rates yesterday. The move, of course, expected following the softer labor market reports. We've been talking about this dovish tilt all week, Louis. Can we say that the Fed has entered an easing cycle? There have been hints of even more rate cuts to come.
Yeah, thanks for having me. Firstly, I think what the market is certainly pricing in a cutting cycle. So currently the market is pricing in 2 more rate cuts this year, which I feel is a bit optimistic. Inflation expectations are still relatively high. We still need to see what tariffs is going to do to the inflation reading throughout the year. So I think the job reading was weaker than expected, and that's why they are cutting interest rates. But inflation will still be something that they'll have to look at, and I think that might put pressure on the Fed when it comes to cutting interest rates. Secondly, also, they still have a very strong economy, so it's not that necessary for them currently to cut rates. They might be able to hold out a little bit longer.
And I mean, there also has been conversations around stagflation as well, and we saw that kind of put pressure on markets, but it seems like that's been shrugged off, Louis.
Yeah, I think there's other economies which are much closer to stagflation than the US. I think the US is probably in the best shape of the lot. So, yeah, personally, I think the Fed is currently sitting in a much easier spot. We'll probably talk about the others now, but if you look at the BOE and SARB as well, they've got much tougher decisions to make.
And let's actually talk about the BOE, right? Expectations are for a hold as inflation is almost double its target. Where are you at when it comes to the BOE? I mean, that central bank has also had to navigate a really tough economy as well.
Yeah, look, that's not... you don't want to be part of the BOE at the moment. Inflation is far beyond the 2% target. But the economy is not growing, so you can't really cut rates because inflation is uncomfortable. But you kind of have to stimulate the economy because there's no growth at the moment. So it's very tough. That's a situation where you don't really want to be. I don't think they know what they're going to do next. So it's a bit difficult for us to try and figure out what their solution is there.
Tough time to be, the BOE governor, as well as a tough time to be Rachel Reeves with that budget being delivered, I think, next month. So, yeah, we wait and see what plans she has to, restore investor confidence when it comes to the economy in the UK. Expectations here at home are also for a hold, Louis. Do you share the same sentiments, even after the print we got out yesterday, where we saw inflation ticking lower to 3.3% in August?
Well, the SARB inflation range used to be between 3 and 6%. Currently, the inflation reading is around 3.2 or 3.3%, which is comfortably in that range. But now, obviously, they changed that. They want to stabilize the inflation around 3%. I think we're actually sitting in a situation where inflation is kind of low. It's lower than it's been for a while.
Yeah.
And we are sitting with high unemployment and low growth. So it might actually be an opportunity for us to cut rates, seeing that the US is also cutting rates and that we have a strong rand or stronger rand at the moment. So it is actually an opportunity for them to if there were a chance to cut rates, it might be now to cut rates. I'm not sure what the reasoning is behind not doing that.
Listen, as from one South African citizen to another, I hope they cut rates as well so we can get that relief coming through. Let's move over to some company news. Novo Nordisk's share price popped this morning after its Wegovy pill trial showed significant weight loss. A game changer, right? Considering that everyone in that space is really rushing to get an oral treatment to the market.
Yeah, that share price has been very volatile. just regarding if you look at the tariffs, then the tariffs would have been a couple of 100%, and they changed that to below 100%. There's still a lot of uncertainty around the Novo Nordisk share price, but we share the sentiment. I think it's a good company. There's a lot of upside potential if the trial goes well. So but it will be volatile, and it's a more risky type of investment, but definitely something to keep an eye on.
I'm going to put you on the spot here. Novo or Eli Lilly?
Well, Novo is much cheaper, but obviously for good reason. Lilly doesn't have to contend with the tariff risk, which Novo obviously has to do. I think product-wise, it's very similar. There's been multiple studies then proving one's better or the other one. But I think at the moment it's very similar product-wise, but the valuation, Novo is a lot cheaper. But as I mentioned, there's real tariff risk there.
All right, let's move over to buy. It's updating markets today saying, it's shown resilience over the first half of its financial year. The group, of course, poised to benefit from the AI boom, cloud computing, as well as cyber security. Is this a company you follow, Louis, or would you be, nibbling on the bigger players in the space?
To be honest, it's not something we invest in, not really something we follow. We tend to rather invest in Nvidia and Microsoft, the bigger players in the space. But obviously they're playing in the correct space, so it is something to keep an eye on, and definitely something to keep on your monitor. But it's kind of disappointing the numbers that they've shown over the last the first half of this year. But according to the CEO, it's most of the headwinds are behind them now. So we look forward to seeing the second half of the year and what they can do.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
I'm going luxury goods. I was sort of going in between because I do own both. I own Richemont and I own LVMH. It's not Richemont I've had for many years, but LVMH I've recently started to nibble on. There was a luxury retailer this week, Watches of Switzerland. They came out with a report stating that they don't anticipate an immediate, or let's call it a material impact, from the US tariffs. And we know that specifically some of these LVMH's companies have been under quite a bit of pressure lately, share-wise, for these tariffs. People got quite a bit of a bad outlook, and I think a lot, or even more, bad news have been priced in. This is not a value company. Don't by any chance look at a LVMH or a Richemont saying, oh, and I'm going to wait for single digits P's, because you might be, waiting a hell of a long time. But I mean, it's a quality company, both these companies. And I do think that if the tariffs are not going to have that material effect as some of these watchmakers now, watch sellers are indicating, I think LVMH are looking attractive relative against its historic evaluations.
I'm going to go for my fallback, which is Ferrari. And the simple reason, I've never seen analysts so bullish, which is always a worrying case, when they get too worried. But still, hopefully their dreams are fulfilled and the share price keeps going up. But I always love it, if ever, it's still one of my favorite stocks. But I must admit, at this point, where we are in the market, I think we need a bit of a breather. You remember, Simon, when we started off in the early year, we would have been happy with 8, I'm talking in the global market, 5, 6, 7, 8%. Yeah, it's a lot higher than that now. But I like good markets. I'm not going to talk it down.
So David and Skalk picking counters from the luxury industry, LVMH and Ferrari. Your take on those stocks, Louis?
Yeah, we're also very constructive on the luxury sector, but we pick stocks from that sector. So LVMH we also have in our portfolios, and Ferrari is one of our larger holdings. We feel very positive. You can look at Ferrari's performance over the last 10 years. Gross margins always increase, operating profit margins always increasing, even through tough times. They still manage to always grow their revenue. It's just an incredible business. Just for interest sake, I mean, you can't just walk in and go buy a Ferrari. You actually wait, and for some of these people are waiting a long time just to be able to buy a Ferrari. So they've built up a competitive advantage that very little other companies manage to do over a long period. So yeah, we're very constructive on Ferrari. LVMH less so. We prefer Hermes when it comes to luxury goods. But LVMH, we also starting to build up a smaller position in that just because of the share price weakness over the last year or so.
Okay. So what are you liking this afternoon? What is your stock pick?
Yeah, so my stock pick is the Uranium ETF. Just because you get exposure to the complete sector in that ETF, it's a cheap way just to diversify. So obviously, we all know the AI boom and technology is eating a lot of energy. So these data centers use up a lot of power, and it's actually forecasted to grow at about 200% over the next 5 years. So this is quite a lot. We're going to struggle to match that with wind or solar energy. Nuclear is a very viable option, and they are at the moment making these small nuclear reactors, modular reactors, which they can use to power cities and power data centers. We are very constructive. We think we've done quite well with it over the last year, but we think there's a lot of growth in the nuclear power industry over the next 10 years.
All right, let's leave it there. Louis, thanks so much for your time and taking us through trade at midday. Now, that was Louis Storm from Vega Capital.